Good afternoon, traders. This is Christian Farmer, Strawberry Trade Group, and this is your end of market recap for Monday, the 23rd of February, last week of February for trading stocks. And, some things to talk about today. A lot of separation once again in this market where you've got some things really underperform, moved to the downside, and some other things kind of hanging in there and doing fairly decently. Risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving any advice or recommendations. Everything that we're going through is for information purposes only. Please also, if you look at the link that is scrolling on the bottom of your screen, that is for our Substack. I put out a free post every day. The majority, like 70% of it, is free. If you want to see my open positions, the TTG global trend portfolio, which right now is up 10% year to date, you could see all of that as well as all the research that we put out over the weekend, my favorite trade setups, favorite charts, and our watch list. That's a little bit extra, but at the very least, sign up for the Market Pulse midday, and you could get a quick jump on everything that's going on in the market. I try to make that about less than a 5-minute read every day, like 3 to 4 minutes, and that gets you through everything. Of course, I put in audio there too to kind of keep you informed, but if you only have 3 or 4 minutes, like that's the note that you want to read to kind of get a good picture of what's going on for the day. All right, so that said, this is no doubt a tricky market that we have on our hands. When you see things go down, once again, the software names legged lower, down 4.7%, and really the banks joined in on that today. We've seen some weakness out of the financials. What I'm referring to is XLF has been breaking down, but the banks haven't. And the reason why there's been that separation between XLF and KBE is there's things like private equity companies, there's insurance companies in the XLF. Those are not in the KBE, but the KBE finally succumbs to that in the KRE and broke down today. And so that's a big clip down 4.3%. The XLF was down 3.3% for the day. Transports were down 3%. For the day. Retail was lower. Crypto stocks were again lower. The breadth today was not very good. I think it closed at around the up volume for New York Stock Exchange was only 29%. So it's also one of those things too where markets had a pretty decent day, I believe, on Friday, and we're just not getting that follow through. We can't really kind of begin to, like, we're crawling, but we can't walk, and we certainly can't run. Like, we're not putting together consecutive days. It's just kind of back and forth. So you can kind of just I think just understanding right now that we are just moving back and forth in a range. Even I'm going to start with the VIX chart, and just to kind of put a little bit things in perspective at this point. And then I'll also talk about, whether things are deteriorating. And I'm going to show you, sorry, let me just bring up the right chart. And I'm going to show you performance year to date for a lot of sectors, and we can go through that, and you can kind of be a little bit of a judge for yourself. Of course, I'll give you what I think is the most interesting out of that, but you could also formulate your own opinion. So yeah, here's the VIX, and this is it's the same thing as like what SPY is doing. It's exploring these ranges. Every time it seems we perk up to about like, in the lower 20s, we hit like a high intraday of like 23, and then we come off. Now, we didn't go that high today, which I don't know if there's really a major conclusion that I can draw from that. Oh, we made a lower high in the VIX today. I don't know. I just think overall, I never really like to chart the VIX. I just really like to basically understand what it's trying to tell me is that, hey, above 20 and you've got a little bit higher than normal volatility. And every time we kind of come back to this lower range of like around 18 into the 17 a little bit, we don't stay there for long either. And volatility creeps back in. So right now we're just kind of like, just with the overall market, the volatility keeps going up to not any extreme levels, to the lower 20, and then it comes off. And also to the lower end of the range where volatility looks like it's starting to contract, and then we come right back up. So it's nothing really extreme here, but volatility is still present. And again, this is just, we got to remember too what the VIX measures. It just measures the implied volatility of the whole S&P. It's not covering like what you hear a lot of people talk right now about, which is dispersion and how wide some stocks are moving on either side. And so there's definitely there's a lot of things going on in this market, even though SPY continues to just basically do this, which is trade sideways. Now, could this be that we're rolling over? That it's a slow rollover? We don't know yet. There's definitely like, here's the high. Could be some form of a head and shoulders. It could, but really until we kind of break back below the lows of the range, which is around like 677 in SPY, you could do all this. You can come up with any type of bullish or bearish scenario in here, but we always go by what is rather than what we think might be happening. For now, we're right in the middle of the range. And the other thing too is we're just not getting any follow through. Like I think I joked around a little bit in Friday's video, or if not, it was in the member weekend video that I put out saying, hey, we got a really nice candle, but do I think that we're going to get follow through from this? I said, we haven't really been getting a lot of follow through. One other thing that I'm going to mention too before I go a little bit further into the charts is that it's also end of February. This is not a seasonal strong time of the year. So, if you kind of think about that in that perspective, that this is supposed to be a weak month, then that kind of helps. It kind of helps say like, hey, if you're surviving, this is a survive in advance type month, right? You don't want to get yourself too caught up into too many bad situations, and you kind of go from there. Now, I'll just kind of give you my perspective on this. Like, I learned a lot from what happened to me at the end of January, where I was having a real nice month, and I gave back some P&L because I was being a little bit too stubborn with a couple trades. So flat, you move forward to this month, and I always have that fresh in my mind whenever I do something stupid. I have that in my mind that, hey, don't do that again. There's no reason to get yourself into those situations. So I've been pretty busy now. Again, the month's not over, and I still have a chance to blow myself up for the month. But I have so far, I've like been trading pretty smart this month, and just whenever I start to see something look like it's not working out, I've been a little bit quicker to take trades off. I took one trade off today where it was just down a little bit, but this was a trade that I put on Friday, and immediately like, hey, it's not doing what I thought it was going to do. Well, I'll just take it off. No big deal. Put my alert back on the trade. If I have to get back into it, so be it. Right. And that's been a lot of that, which has kind of helped me. Now, I am not having like a stellar month for February, but I'm doing okay. I've made some good trades this month. It's just the fact that there's a lot of names that, have been a bit difficult, right? The breadth has not been like today. We've had a lot of days where the breadth hasn't been great. So let me get back on track here. SPY, watch this level here, 681.87. Notice these wicks on these candles, right? SPY like try to get going in the beginning of the day. This is the first, I think this is this was back in here, but even in the middle of the day, we try to get going, and you could see these long wicks both on the upside and the downside. So it just shows you like the market doesn't want to go anywhere. And I think there's also where you've got a lot of things going on. And usually the market can handle like one or two. If it's a pretty strong market, the market could shake off like one or two things. But when you start adding uncertainty, and what I'm talking about is like stuff that you're not going to see in the charts, but it's good to just understand where we are, is that we don't know how the situation with Iran is going to resolve. Is it going to be a negotiation, or is it going to be an escalation into some type of a conflict? We don't know that yet, and it's probably why the market is just doesn't want to go higher. Sorry, this was the candle I think at the beginning of the day. And notice we're not going higher, we're not going lower either. For now, we're exploring the bottom of the range. You also have this tariff, dare I say, nonsense going on, because listen, it's just tough to understand. And again, it doesn't seem like the market is really that concerned with it. But I had said this on Friday that the Supreme Court coming in and ruling against the administration's tariffs, it just kind of creates more uncertainty. Now you have some countries saying, "Hey, we want to renegotiate all the trade deals that we signed." So you have, it's a mess. That's even more of a mess than it was previously. And then the AI scare. There was an outfit that wrote, I think it was, I'll name them, Centrini, which you probably have either knew them or just heard about them today. But they wrote a paper on the risks of AI and to jobs and to the whole system. I don't personally, I didn't read the whole thing, but I kind of skimmed through it and said, okay, this is all stuff that we kind of know already. And I think they went probably more in depth talking about the impacts and what it could really lead to. So, yeah, I mean, I think, you know, unless you've been living in a cave the last few weeks, I think that everybody knows most of this stuff already. Now, maybe it took it another level and talked about how bad things could get if they progress, particularly for white collar workers. So, I don't want to completely say that the paper wasn't of interest at all, but I really didn't get any new information about it personally. Now, maybe it was some people were not as informed about what AI can mean, but again, I think that there's multiple things, multiple issues going on with this market, and one of which is that the Mag 7, or if you want to call them the Lag 7 now, like they've lost market leadership. So now this market has done very well with picking up the pace and saying, okay, there's many other areas that you could basically go into, and that's how we kind of started this year and went through part of part of February that way. But and there's really some validity to that, because the rotation, I think, is real, because that's how I've been positioned. I have really gotten away from the Mag 7 names once I heard that they were all doing this capital expenditure. And I focused on the names that basically are going to receive the money. And so it could be like, to me, that's almost like a 1-for-1 rotation, right? They're going to spend all this money and they're going to give it to now they're going to do some in-house development too and make some of their own chips and things like that. But they're also going to be spending money to other companies. So that's part of it. And then I also think, which doesn't get enough attention because it's not as fun to be positive as it is to do doom and gloom, um, but but it's not going to catch as many eyeballs. But in the industrial companies, and I've said this before about the transportation companies, they're going to be using AI to automate a lot of their systems and to improve their operations. So I still think that AI is going to actually help a lot of the companies. And sure, if they're going to be cutting headcount because they can save money some places, then that's also a positive for some of these companies. Anyway, that's my take. But clearly, going over all these things, it's a complicated market right now, and people are trying to navigate that. And clearly, I'll get to the software move in a minute. Let me just get through the cues. Also, the cues, same thing. We're inside the value area for the week. Reminder that the value area for the week is based on all of last week's activity, and we're basically putting somewhere around like one standard deviation around all of last week's activity. So we're holding in there. Now, if we start to kind of break lower, then we're in price discovery to the downside. But for now, the market's trying to hang in there. And let's go back to this. I didn't show you the Q's daily chart, but believe it or not, like even though today down 1.2%, as I mentioned in the beginning of this video, volatility has increased to hanging around that 20 level. So yeah, we are going to see more 1% moves. Today was just an inside day, so nothing has really changed. Like if you were positive about the markets on Friday, then today an inside day doesn't mean any change. It's just you have a smaller move, and you didn't take out any of that from Friday's action. So that's that. Here's where it gets a little bit more dicey here. Now, this did not close on the lows, but this is kind of another issue right now for the market. IWM does have a lot of financials in it. IWM tried again. This is a different looking chart, like there's no inside day here. This was a downside move. Now, again, look at the wicks over here. We're not closing on the lows. So 257.93 is still the support to watch for now. And also you can begin to look at this developing March value area and notice how it's like an inside value area. So the price action is getting pretty tight in some things. So one way or another, things are going to break. And I think IWM small caps are going to have that break at some point. Maybe it happens in March. And again, either upside or downside. And I would also say this too, and I'll probably tweet this chart out. But I've seen some charts over the weekend because Nvidia is going to report later in the week, but that's Wednesday after the close. And people are talking about the price action is getting really tight. A reminder that price action doesn't always resolve to the upside. It could also resolve to the downside. So I don't know which way personally this one's going to go. I think that Jensen being positive on the earnings call is probably priced in because he does that every earnings call. He talks about how great AI is going to be and how, the early innings of AI. So that's probably already all priced into the stock because he literally says that every time he speaks. So what's going to move the needle for them? To the upside? I don't know. I think that there's more risk to the downside, but who knows? Maybe if they mention something new that they're working on, then I still believe in the company, and I do think that they have great management. But the stock also hasn't moved all year long too. So maybe this gets it out of the range. And again, I can't tell you which way that's going to be. I'll say it one more time. Tight price action could resolve to the upside or to the downside, but it's going to have to be something new. It can't be the rah, rah, rah. AI is great. We're in the early innings. Right? It's got to be something new. We've heard that several times at this point. So that's what we've got for this. I also just wanted to look at the overall semi ETF, right? Because that's kind of slowed down. Now, keep in mind, here's the conundrum here. Right? Could this digest a little bit? Well, definitely, because this ETF, even though Nvidia's is essentially flat for the year, this ETF is up 15% year to date, right? And there's a lot of groups that are up double digits, and we're not through. We haven't even made it through 2 months of the year yet, and you've got a lot of groups that are up over 10%. If you don't believe me, I will go through that in just a second. Let's talk about what happened here to the downside, right? Well, this is why I've said stay away from downtrends. I try to be as much of a strict trend trader. Every once in a while, I will take a shot something that's been beaten down, and I'll usually do that versus in an option trade. So I can only lose the premium, but I don't really. I'm not going to commit a lot of capital to something that's in a downtrend, right? Something, again, if you're not familiar with this, you need to study this. But once something is in an uptrend for a long time and it breaks, the best thing that I know to do is to get out of the way, right? And then wait for it to base, right? And we see that over and over and over. And again, I always give these books out over here in my back shelf to say, if you want to educate yourself, don't ask, AI to do it for you. There's something that's really important about going through the book and reading it yourself. Because I see a lot of people on social media who can't do that now. Even if something is like a page long, they need AI to summarize it for them. And I know we all want the answer quickly, but there's something to be said. You have to learn a little bit and spend some time, right? This is Stan Weinstein's books about secrets of profiting in bull and bear markets, and he talks about different stages, right? And usually, what happens is this is in a stage 4 decline. It usually then needs to go to stage 1, and that's kind of like a sideways period where it bases. So this isn't there yet. And the other thing is, you're going to want to see these names where they don't go down on bad news. They're getting bad news and they're getting crushed right now, right? Let me say that again. You want to see, once things have gone down enough, you want to hear bad news about a company and the stock doesn't fall anymore, right? And that's a surefire way to say that the bottom is not in yet. That's the same thing, like, look at what happened to IBM today, which is making a lot. I mean, this is not, it's too early. Now, this is down to some support, right? That's the yearly value or 223. But even though it's down to support, it's a level of interest. It doesn't mean I'm going out and buying that, right? Who knows? Maybe this was probably down 13%. Seems like an overreaction to me. People asked me back here, did I think it was an overreaction? And I said, well, let's see what happens at this VPOC, right? And clearly it just hung around here for a couple of days and then it took another leg lower. So I can't, I wish I could tell you when the bottom is in for all these things. But for now, staying out of the way has been the best thing. And it's the reason why I haven't really had any drawdown in any of these things because I've stayed away. The price action has told me once it broke the 50-day moving average to not hang around these things. Right. And there is another VPOC that's coming at 75.77, but that might just provide stabilization like it did in here for a little bit. And then it went lower again. So I'm going to move from this area, but I think there's still some areas that even with the industrials went down 1.3%. Again, the issue is that they're a bit overbought. And I went through in my weekend video for members, I talked about the TTG global trend portfolio. I do a once a week video for that portfolio. This week I just kind of combined it into one video because I was traveling a little bit this weekend. But there's so many of these names, area like in industrials. Forget about today's price action. When I was reviewing this on Sunday, I said most of these are at 52-week highs, so they could use a breather, right? And yeah, so um, let's talk about the banks let's talk about the financials. This is probably the most troublesome area for me. Not so much software names, but I think the financials are important. I think breaking the 50-day moving average in XLF is a bit telling. Notice that this broke in here, had a weak climb back up to the two. Sorry, if I said 50, it's the 200-day moving average. Weak climb back up here and getting rejected and moving down. Now, here's KRE. This just came back to the top of the value area, so it would need to hold here. And here's KBE, which is all banks, and that actually broke further. That not only broke into the value area for the month, but also broke below the 50-day moving average. Now, what did I do in the TTG Global Trend portfolio? I had an allocation to banks. This is just 3% of the portfolio, but I took it out. Now, what I did a couple weeks ago was I think I had about 6 or 7% was in this KBE ETF. And I said, you know what? There's too many things that don't look right in financials, and I reduced it. So I reduced the position from either 6 or 7% down to 3%, and today I took the last position out. Could it snap back here? It could, but I just don't know if it's going to break out. You kind of have to just run that scenario in your head and say, well, what is it going to do from here? I don't know. I don't see it getting back to 52-week highs after this spill lower. I think it'll take some time. What else did I want to review? I mentioned I would go through some groups. Let's talk about gold and silver here just for a quick minute, and then I'll give you a couple things that I was looking at. But hey, there's the break above the value area that I was stalking about a week ago. Didn't get. So this is sometimes when I enter a trade too early, I try to get in before the trade signal. And this happened, right? This moved down on me, and I didn't stick in there for the whole red candle, but I got out about halfway through. And then I watched towards the end of last week and I said, hey, these things look like they're starting to be pretty darn positive here. And here's your break back above the value area for the month. So highest point for the month. GDX also looks great. Look at that come back with a vengeance. The miners have been stronger than the underlying metal. Here's SLV, right? Really nice move, deeper pullback there. But now back above the 50, the 20, the 5-period moving average. And that looks pretty good to me. And I went long some silver miners last week. My last target would probably be this 113.82, but that's a heck of a nice move. And I think like AG has probably been the strongest one. Was up another 3.8%. So there are things that are doing quite nicely. SanDisk, which I believe has some type of event, it's amazing to me. I made this statement earlier on Twitter that I said, hey, if you would have looked at just SanDisk and LITE, light, you would have said, wow, we're in a raging bull market. And meanwhile, we've already gone through a lot of things moving to the downside. Now, it's important. Like I've caught this last turn in light, and I'm very happy and proud to catch that trade, as well as the SanDisk trade too. But you have to be aware that these things, there might be some profit taking because they've acted so damn well. GLW is another one, right? The whole optical space has just done so well. There's 5 or 6 of these companies. Look at Ciena tacking another 3%. So, the lesson from this again is to avoid the names. It doesn't matter what group they're in. I don't care. um, I don't have any emotional attachment to whether it's the software group or the cyber group. I don't care, or the financial group. Doesn't matter to me, right? Find the ones that are going up and the ones that are continuing to make new 52-week highs. I just can't believe how strong this group has been behaving with the market, with the Qs down 1.2%, and the optical group is still going up. So congratulations if you've gotten in, whether it's Sienna or whether it's Corning or whether it's Light. Congratulations if you've caught these setups and you've been able to kind of stay in some of these names. Another name that I'm watching for tomorrow is BE. Again, I would not be going in with a big position here, but I would be watching this 161.19. There was a little bit of option activity. They may have been rolling some calls, but if not, there was one trade that was outright. That was, let's see if I can find this for you really quickly. That was, I think it was the June calls. I think it was the June 140 calls that were I'm not sure if those were rolled. The ones that were opening were the June 135 strike calls. So watch for a possible breakout forming in this. Now, I mentioned I would go through, just to give you a sense in the beginning of this video. Let me just move the screen here to spreadsheet, if this allows me to. This is what we got for sectors. So I'm going to just zoom in here so that you could see the performance. This is groups, right? I'm not going to go over international right now, but this is what we have year to date, right? There are a lot of groups that are still up. How many groups are over 10% in a couple months, right? Now, the question is, are we going to see more groups give back some of those gains and even turn red? Well, take a look. There are, since the last time I did this exercise of looking at groups year to date, there's probably about 3 or 4 more groups, maybe 5 more groups that are now negative on the year. So you kind of have to continue to monitor and make adjustments if that happens. You've got consumer discretionary, you've got tech, you've got China internets, you've got medical devices. Financials are negative for the year. Obviously, about software and the internet group down 14% year to date. So, communications, which covers a lot of, which covers Google, Meta, Netflix, is down 2%. Healthcare is not doing particularly great anymore. It's just up 2.4%. But you still have a lot of groups. Look at materials, right, which is in the TTG global trend portfolio, is up 17% year to date. OIH is up 37% year to date. The semis, right, even though they were down today, they're still up 15% year to date. Metals and mining, which are trying to turn up again. Industrials. So the question will be, and that's where just, having a stop loss on some basic stop loss and understanding, putting some basic moving averages even on your chart. If it breaks a 20-day moving average, then maybe you abandon that. But there's an awful lot of still strength. And for us getting through a weak month, I have to say that there's still a lot of good things. Now, it doesn't mean that, I'll say this is the last point I'll make here, is that, yeah, make adjustments if you need to, right? And I'm doing that in the TTG global trend portfolio. I mentioned that's up 10% year to date. Well, I moved a little bit more into bonds. I took out some of the weakest things, right? So just making adjustments and playing a little bit of defense. And then, of course, I can up that. I could easily get more aggressive once things get a little bit better. All right, guys, that's it for today's recap. I hope that helps. If it does, please retweet the video. Have a great night, everybody. See you tomorrow.